Hi, thanks for joining me again. This week I'd like to talk about buy the offer. It's a term I came up with myself after seeing some particular trading in the market, and that seemed the best way to describe it. Now, just some quick notes. Buy the offer is a relatively short and sharp period of buying in the market, often used to buy or accumulate a position or to remove supply from a particular price level within a certain time frame. The shape of the bar may show a poor close, similar to a VSA style upthrust. It's not a valid upthrust, however, as it is produced in the wrong place. And here's just a quick little illustration of a VSA style upthrust. You can see the poor close near the low of the bar. And generally, a VSA style upthrust is a confirming indicator of previous weakness. It can be a primary source of weakness if it's on very high volume, but generally it's seen subsequent to serious weakness in the market and helps to confirm that weakness was present. Okay. It's often seen during an accumulation or reaccumulation phase when price is no longer trending lower and it is not easy to buy. It's seen as a short, sharp push higher to a predetermined price level, followed by the withdrawal of buying support. The withdrawal of support sees the stock or instrument drift lower in response to its own weight. That means it starts to drift lower under normal day-to-day selling pressure. There's always some selling pressure in the market, and when a stock or instrument falls under its own weight, it's said to be falling just on regular day-to-day selling pressure. And it often means there's not enough demand or buying in the market to balance the selling in the market. And that causes price just to drift lower slowly under its own weight. This process can be repeated over and over with the benefit of not pushing price up against oneself to any serious degree. And that's why it's used to accumulate or buy in the market, because price can be brought up to a certain level and then brought back to that level again, so it can be repeated if necessary until a decent sized position has been accumulated. Larger professionals can't go into the market and just buy their whole position in one buy, or they'll push price up way too much against themselves. So to get a meaningful position, they may need to go up and down over and over a number of times before they can gain enough stock to make it worthwhile for them to mark price up in the future. So down here are a couple of examples. You can see price is moving sideways here, then price spikes higher but close back near the middle of the bar or just below the middle of the bar, but there's no serious downside follow through in response, and instead price tests for a bar and then moves higher. And it doesn't have to be a single bar. Here's exactly the same example. Price moves up, it spikes higher, but this time it closes high and then drifts lower over the next couple of bars, tests again, and then moves higher. So there's no serious downside follow through on this example either. The only difference was it didn't necessarily all happen in one day. It happened over a series of days. And then perhaps on a weekly basis, you might see more like this bar. Okay, some real life examples. The first time I ever saw this happen, and I had no idea what was going on, was on this stock, BRG, Breville. They make home appliances. A pretty successful company. Now, Breville had been steadily moving higher for some time, and I was looking to buy some primarily in my superannuation accounts that I manage. And some news came in here about a month before this happened that they'd lost a certain contract and it might affect their bottom line to some degree, and they gave some guidance. So the market was well aware of what was going on. And then when they came out with their half-yearly numbers, price did this, effectively on known news that came out a month before, and the market was well aware of it. And you'll see this happen, so keep this in mind. The market will use news to its own advantage. So it was confirmed that they'd lost the contract, which we already knew about. The market thrust price lower, and they drew out all this volume. Now, generally, this is a very low liquidity stock, and part of the reason I never bought a position while I was watching price go up, even though I would have liked to, is there was hardly any stock available. So I was one of the buy the dips crowd at the time, just waiting to see price come lower for whatever reason. So price did come lower. The initial low was here, and then there was one more bar down, and then the market popped up for a couple of days. Now, I think I bought on this bar here initially, and then I sat and watched for a while, and this is a daily chart. Over a number of days, price didn't go anywhere. You could see price tested here and very little supply in the market. And I think I bought a second time here and was feeling pretty comfortable when price moved up, and I thought price might well be just going to head higher, especially as this was known news and I thought it was all engineered. But then instead, price gapped lower here and started to come down, and I was starting to get a little concerned. I never really considered selling because my position was long term. I may have bought more if there was another leg lower. But then this happened. Now let's have a close look at it. Price had gapped lower from where it appeared that reasonable support had developed here, and then price drifted down for a couple of days. And then on this particular day here, in the first hour, price moved down to this level. And then over the subsequent next 2 hours or so, price slowly moved higher and higher and went from $5.17 to $5.61. And all of the offer was bought before price was allowed to drift lower. Now, if anyone's a little unsure on what the offer actually is, in the market, if price is trading at $10, you'll have the buyers or the bidders, and they'll line up their bids at certain price levels. This is saying that someone is willing to buy 1,000 shares at $9.99, and over here are the sellers, and they place their shares for sale. They're the offer. So this is the current price that price is trading at, and over here there's 1,000 shares for sale at $9.99, 1 cent lower, and there's 5,000 shares for sale at $10.01, 1 cent higher. And the offer is often known as a stack. It's the offer stack, and this is the offer stack here. And when I say someone's come in and they've bought the offer, or they buy the offer, they come in and they buy all of this all at once or very quickly over a very short period. This may generally take days to get through. That's if the market even does get through it. And in a buy the offer situation, all this is bought relatively quickly. They might take out 1, 2, 3, 4 levels all at once in one big go in 1 second. And then the market will jitter up and down, and there may be a little bit more stock placed at some of these levels, and then bam, they come in again and they buy all of this next lot, and price is then suddenly up here. And then they come in and they buy again, and they buy again, and it happens until they get to their predetermined level. This is buy the offer. And then once it's all over, or once they've got to their predetermined level, price then starts to drift lower because the buying support has been withdrawn and there's a few sellers will come into the market for whatever reason, and the market can't hold them up because all of this demand's been withdrawn and price just drifts lower, often right back to where it began. Okay, back to where we were. Now this is the buy the offer bar. Price went from 517 below all the previous trading, and would have had some nervous Nellies come out being concerned down here, and I was sort of one of them. And it was bought up to 561, all in 2 hours. And then price drifted lower for the rest of the day and closed pretty much exactly where it began. There was no real testing the next day. Instead, price just started the markup phase almost immediately. And you can see price went up for 1, 2, 3, 4, 5 days. Then there was a couple of days of testing. You can see that the volume was very low on the testing. And then price moved higher pretty quickly. When this happened, and I first identified what was going on, it took me a couple of days to work it out. I was scratching my head. I was relatively new to VSA and Wyckoff principles. I'd been looking at it for a couple of years, but I was no expert. And a few days later, when it occurred to me what had happened, remember that this is not a VSA or Wyckoff term. This is something that I've come up with myself and from what I see happen in the market. So there was no references that I could move back to check what happened. Took me a couple of days to work it out, and in the end, I pretty much went all in on it. I figured if they were that determined to buy like that, to buy some very large positions, then I was going to ride on their coattails and see what happened. So I maxed out my trading account, and I maxed out both the superannuation accounts that I manage, and I pretty much went all in. And I still hold some now, still. All my trading stock's long gone. But in the superannuation accounts, I still hold a reasonable amount. But I went pretty much all in. At the time, I think it was the largest position I'd ever bought. And price responded almost immediately. So that was Breville. You'll often see it on an index like this. I do my daily commentary on the XJO, the S&P ASX 200 index. Now, in this case, this is a buy the offer type bar, and I'll call them out at the time, suspecting that they're buy the offer. And in this case, it's not necessarily being used for accumulation or to buy. It's used to remove stock from a certain price level to allow the markup to continue. You can see here's the markup. There's been buying down here, and this was a weird sort of shape because of the market moving in sympathy with overseas markets more than anything. The markup was really about to begin here, and overseas markets took a little tank for a little bit, and our market has to respect what's going on overseas. So this happened for a little while before the overseas markets steadied the ship and started rising themselves, and that allowed our market to begin the rise in price like it was going to in the first place, or like I believe it was going to in the first place. It's only my interpretation. So here the market accelerated higher, drew out really high supply, and then drifted lower into the close to close just below mid-bar. But there wasn't even a test the next day. The next bar was just up in response, and any remaining supply at this price level, around 6,400 at the time, it was just bought. Then there was a couple of days of testing. You see here, 2 days of testing, and volume reduced on both days. And then the markup continued again. And this is how the markup works. Buy, buy, buy. When you strike some increased supply for whatever reason, I haven't looked, maybe there's some some trading or congestion across to the left where supply is being drawn out from. The market's gone into a buy the offer situation to remove that supply. And in the indexes, you see it quite commonly. Here's more recently, this bar here for me is a buy the offer bar. Prices come back for whatever reason. It's consolidating sideways here. You've got a little test, a little mini shakeout, and then price accelerates higher, draws out increased volume, or the market buys increased volume, but then price is allowed to drift lower into the close and close poorly. And it looks really bad. It looks like a proper upthrust, and market's going to continue lower in response. But instead, there's a narrower spread down bar on reduced volume, and then the next bar is up. That's not the response you'd see if this was really an upthrust and price was going to break down and move lower. Here's a little mini, same form, move up and then close poorly. And I imagine this next day here, the market's tried to rise in response to that buying, but there was no demand in the market and price is allowed to drift lower so that the buying can resume at the same level without pushing price against themselves. So price came back on reduced volume, and then over the next 2 days, price pushes higher. Here's your buy the offer bar that's clear, closing poorly again. And then there's like a shakeout in response, and the next bar's up. So you can see this is like a reaccumulation phase. In this part of the market here, I've been suggesting for some time this was a reaccumulation. And here it is in here, and here are these buy the offer bars that all look poor, but there's no downside response of any serious nature. You can see here's effectively the low of the range, and there's been no serious downside follow through to any of these bars. So you can only take it for granted then that there's something else going on, and I've decided to call it buy the offer. And in response here, you can see price has broken out. It's come back. It's tested the breakout line. Now price is attempting to move higher. And this may start a new markup phase, something like this. Because down here was the previous accumulation period, just like this one. So you've got the accumulation, the markup in response, the next period of accumulation, and here the markup in response is beginning to get underway again by the looks. Okay, there's a little mini one on this chart. I've got it marked already. You can see price had been trending higher. It's come back for whatever reason, but these two bars suggest that serious buying has come in. The close is way above mid-bar here. It's up at the highs of the bar here. In both cases, the next bar was up, and here you see there's a test in response, and then a gap up bar here, gap up, push higher, and then close poorly. Next bar's a test here, and then price begins to rise in response. This is a little buy the offer bar. Now, here's a weekly chart. Now, I expect what's happening here is some in the market would like to accumulate, but there's no supply available. The liquidity in this stock, this is a weekly chart, the liquidity in this stock is really, really low. Now, if you're a professional trader and you need to build a meaningful position and you don't want to push price up against yourself too high, because if they come in and buy millions and millions of shares in a very relatively short period, they're going to push price up to a massive level really quickly, and that's no good to them. They want to buy at the lowest price possible then begin a markup phase, and then sell at a higher price. So here is an accumulation period, and you can see price moves up from the lows, and then price is allowed to drift lower. Price moves up, price drifts lower. Price moves up again, price drifts lower. You can see how price has gone nowhere, but over a period of time, and this was over like 6 months, pretty much traded between 6 and 8 cents. And quite a bit of stock can be accumulated over a period. Now, this here, you're obviously wondering, was an announcement. I can't remember what it was, some partnership, I think. And it was viewed positively by the market, but it was not going to be supported because whoever was in here accumulating, they weren't going to support higher prices at this time. They may have even sold a little bit into it to keep price from getting too high. And then once they can get price down to where they want again, this was a weekly bar, remember, so it's taken all week to get it back down where it was, then they can resume their accumulation without upsetting too much. And then at a certain point, the markup phase begins. Here's a clear breakout bar, and just on that quickly, whenever you get, I'll mark in the accumulation here, this is the breakout bar. Now the higher up price consolidates in response to a breakout, the stronger it is in general. Now whenever price accelerates higher, it will draw out some supply, almost always. It'll either be coming from people who are locked into bad positions to the left. They've been holding on, saying, I'm not going to sell. I'm going to wait till price gets back to my level and get out for break even. There's also some profit taking for anyone else who bought down at these levels. And there may even be, in larger stocks particularly, some short sales. People think that it can't be sustained at this price, so they will go short for whatever reason. Now, the higher price can consolidate in response to the breakout bar, the stronger the market generally is. If price has to come all the way back down near the lows of where price began to rise and break out, it's a whole lot weaker than if the whole consolidation can be done in the top half of the bar. And sometimes you'll even see it happen in the form of bullish absorption, and that's really strong. When you see a breakout bar sort of like this, and price can't even consolidate sideways or lower and form either a bull flag or a sideways consolidation, instead price shows all the qualities of bullish absorption, that is, a pressing nature to the upside, down bars that show no downside follow through, like these two here. These are threatening down bars that make it seem as though the market is going to push lower, but there's no downside follow through in response. When you see that happen here, as prices going higher, then that's another sign that bullish absorption is taking place. The market is so strong, the consolidation is taking place as price pushes higher in this case. Following a breakout bar, if you see bullish absorption, the consolidation is taking place as the market moves higher because the market is so strong. And also clustering of closes at a certain level, like here you can see all these closes all at the same level, is often a telltale sign of bullish absorption. So if that was happening as price was moving higher, there were some little sideways periods where the closes were clustered together like this. It's another sign that bullish absorption is taking place. If you see a breakout bar and bullish absorption, it's generally quite a bullish sign. And finally, here's another one on a weekly chart. Down here, there was buying, This was selling here because there's downside follow through in response. There was some preliminary support here on this bar. Prices closed back near its highs, but then this is like a deliberate push lower. But then the market never really went much lower after that. You can see volumes were increasing here, down here. Spreads remain incredibly narrow. There had to be buying in those bars, particularly that last one. That was a strong sign of buying coming in. And then in response to this volume, which is really quite high volume, considering what was taking place previously, the market's pushed higher. This is a weekly bar, so this is in my opinion, it's some form of buy the offer. Prices accelerated higher, allowed to drift lower into the week's end, and even the following week prices drifted lower. But the consolidation period has taken place here. There's a little buy the offer bar there by the looks. And then prices accelerated up and then been allowed to drift lower again. Then a period of consolidation has taken place again. And then prices accelerated higher one week, come down the next week, and then consolidated again. And look at the difference between what this is, and here's the markup. The true markup has taken place here. Look how different this is to this. The same thing could have happened, but there was the need to accumulate a meaningful position in here before this can happen. Because what's the point of marking it up if you're not holding any stock? So this is the buying period, this is the accumulation, and this is the markup. Now the markup just sees price moving higher, bar by bar. It's not moving higher by one bar, then closing poorly and moving lower, or by one bar and moving lower immediately. It's moving higher week after week, and then price tests for supply. The test for supply must be considered successful or low, and then price moves higher. Little buy the offer bar there to clear some space or remove some supply. Perhaps, see, here was a breakdown. Okay, so there's likely to be some supply in here. So price is having a little bit of difficulty getting through. So there was a little buy the offer bar there to remove some stock. Price attempted to push higher, but it's being thwarted a bit. It can't get higher as it would like. So then it comes back and tests for supply. And in this period here, there's probably been absorption going on, buying whatever stock is being drawn out from this little period here. This is where price broke down on this wide spread bar here on high volume. And people would have got stuck in here. They're waiting for price to come back to their level so they can get out for break even. But then price accelerates higher again over a couple of weeks, and it's gotten past this level. And I think in response, prices continued higher for some time. There's pretty much some supplies being drawn out of here for sure. Whether this is the beginning of a distribution period, I'm really not sure. But the buying was taking place down here. Here's your period of markup. When it gets steep like this, you always have to be a bit concerned that the sellers are coming in and you don't know whether it's these people that are selling or not. But when it gets really steep like this, you have to suspect at least somebody's selling for sure. And the mid-bar close here is a bit of a concern. But the buy the offer periods are clear. It's a weekly chart. If you look at it on the daily basis, it looks just really confusing. It's really difficult to read, but you bring it back to a weekly chart and you can understand it. And part of the confusion comes because it's a micro cap stock. And some days there'll be hardly any trading because there's no supply around, and price might do nothing or hardly anything for days on end, and then all of a sudden it accelerates higher. and something like this is formed, and it seems to come out of nowhere. But you pull it back to a weekly chart, it resolves a lot of that confusion, makes it easier to read. Okay, hopefully that was helpful and explains what I mean when I say buy the offer. It's generally used for accumulation or reaccumulation, but it can also be used to remove supply from a particular price level to make it easier for a markup phase to continue. It'll often happen in a single bar within a particular time frame, but it can also happen over a longer time frame, like a weekly chart, and the daily bars are a little less easy to read, but the same process is taking place. It's sort of like it takes place in slow motion. Okay, thanks for joining me again. Hopefully that was worthwhile watching. Thanks for your time. See ya.